Good morning. Thank you for joining us today for our Farm Foundation Forum on Trade. We're glad to have the opportunity to engage with you on today's topic of the outlook on global markets and negotiations. My name is Sherry Roki Fiddler, and I'm the president and CEO of Farm Foundation, located outside of Chicago, Illinois. I'm also a fifth-generation farm owner-operator from Nebraska. Throughout my life, both on and off the farm, I have seen, as so many of us have, the impact of ag trade on every sector of our industry. So I'm looking forward to hearing from our experts today as they share their perspectives on the implications of global market conditions for ag trade negotiations and policies. Before we get into today's program, I'd like to take just a few minutes to share a bit more about Farm Foundation. We are a 501c3 nonprofit working at the intersection of food and agriculture to address challenges that affect the entire value chain. Specifically, we are an accelerator of practical solutions for agriculture, accelerating people and ideas into action. The three levers we use to accomplish this are policy, innovation, and education. Forums such as today's are just one part of our extensive program of work, which is guided by our mission to build trust and understanding at the intersection of agriculture and society, and our vision to build a future for farmers, our communities, and our world. We rely on partnerships to fund our work and increase our impact. So if you're interested in learning more about funding or partnering with us, I invite you to reach out to explore collaboration. You can also learn more about Farm Foundation and our work by visiting our website at farmfoundation.org or connecting with us on our social media platforms. If you're posting on social media about this morning's session, we ask that you please use hashtag FarmFoundationForum. As we get underway with today's forum, I would like to quickly go over just a few housekeeping notes. We invite you to submit questions by clicking on the Q&A button at the bottom of your screen. And when submitting questions, please include your name and organization. Due to time limits, our moderator may not be able to ask all questions submitted, but we'll certainly do our best. This forum is being recorded and will be posted on our website at farmfoundation.org, and we'll send out that link following today's program. If there are any connectivity issues during the forum, we ask that you just stay on the forum, as those generally rectify themselves just after a few moments. And finally, when the forum concludes, you will receive a link to a short survey. Farm Foundation appreciates your feedback and your time in completing the survey. Global markets and trade are at a moment of transition, and the outcome of trade negotiations has never been more important to U.S. food and agriculture stakeholders. As a nonpartisan objective organization, Farm Foundation is uniquely positioned to convene the diverse perspectives necessary to productively examine such issues. We are pleased to have brought together experts in ag economics and trade, representing the government and the private sector, to advance our understanding of the challenges and opportunities that global markets and trade negotiations present to U.S. food and agriculture systems. So let's get started. I'd like to introduce today's moderator, Clayton. Chris is the Ag Policy Editor for DTN Progressive Farmer, where he has been covering issues in agriculture since 2005. So at this point, I will turn things over to Chris.
Thank you, Sherry, and welcome to my home office in Glenwood, Iowa. Before we begin, I want to thank the Farm Foundation for hosting today's event and for continuing its educational forums throughout the pandemic. Today's topic comes as the U.S. Trade Representative's Office is still in a transition period. President Joe Biden's nominee for the U.S. Trade Ambassador, Katherine Tai, still has not had her confirmation hearing. That is scheduled for Thursday before the Senate Finance Committee. Last week, USDA projected record agricultural exports for fiscal year 2021 at $157 billion. And as I'm sure many of you caught portions of USDA's Outlook Forum last week, China was again a major topic of conversation when it came to any of our trade discussions. So today we're fortunate to have an excellent panel to discuss some of the major issues in ag trade and policy. We have at least 3 economists on the panel here, but I've been promised that their presentations will not bludgeon everyone with too many PowerPoint slides. So we'll see how that goes. I'll provide just a brief introduction of each panelist, and then we will begin with their presentations. As highlighted As Sherry highlighted, please be sure to send your questions in the Q&A function. Our panelists will be watching those, as will I, and that will be a jumping off point for our discussion once the presentations are through. And panelists, please make sure to unmute yourself once you begin to speak. First up, we'll begin with Sharon Cyto, a senior economist at the USDA Office of the Chief Economist at OCE. Ms. Sydow focuses on economic analysis of agricultural trade policies and market development. She began serving at USDA in 1991, studying grain and oilseed outlooks from the Soviet Union at that time. She has worked for trade negotiations for the United States at the WTO and at USTR as well. She returned to USDA in 2015. And Sharon, I will turn it over to you for your presentation.
Great. Thanks so much, Chris. And I'd like to join you in thanking the Farm Foundation for hosting this really timely panel today. I'm actually looking forward to hearing what our panelists have to say and also from the audience. So we'll start with the first slide. I'm just going to jump right in. And as Chris said, USDA had our Ag Outlook Forum last week. A lot of you are probably familiar with some of these slides if you attended. I tried to sort of pull out some of the trade highlights for the presentation today to kind of give some more context and a little more detail. The first slide here is taken from a forthcoming article that will be published in the Choices magazine, co-written with Sean Arita in the Office of Chief Economist, as well as Jason Grant, who's at Virginia Tech. The article hasn't come out yet, but you can see the link at the bottom. It's on Virginia Tech's website. And we kind of wanted to try to take an initial look at the impact of COVID-19 on agricultural and non-agricultural trade and how it compared to past economic and other crises. And as we can see in this chart, looking back at 08, 09, the global financial crisis, you can see both ag and non-ag trade were significantly lower. When you look over to the right hand of the slide and you see that the 2020 pandemic period, ag trade was actually up by 4%, non-ag trade down 6%. But these sort of global numbers don't really tell you exactly what's happening within the sector. Certainly we know for some commodities like cotton, hides and skins, the trade in those commodities were down in 2020 in large part because the demand for the finished products that are used with those commodities was reduced because of the economic impacts of COVID. So fewer textiles, fewer clothing, fewer leather goods being sold. The other thing that this chart doesn't really tell us is how much of this is COVID and how much of it is other factors. And so we know particularly at the end of the year, China really started buying a lot. And so that, obviously helped to bring up some of the agricultural trade numbers. But we've done an initial assessment looking just at the COVID effect on agricultural trade. We think it might have reduced ag trade by about 4% in the second and third quarters, compared to almost 19% for non-ag trade. So in the next slide, I think Chris already alluded to the fact that we came out with our update of the fiscal year 2021 ag export forecast. It's up 21.3 billion from fiscal year 2020 to a record $157 billion. Again, we'll apologize now because we're going to talk a lot about China today. It doesn't mean that we don't pay attention to other parts of the world, but so much of the S&O situation right now is really a China story, as Chris alluded to. In fact, it's really quite amazing. Records really, for all of a lot of the commodities, both in volume and value. In fact, in the next slide, we'll take a look and see how bulk exports, so these are, row crops primarily, record volumes and value, but you can really see the difference between the November forecast, which is the dotted line, and the solid line, which is the February forecast. And value is actually up about 7% from the previous forecast, reflecting higher prices for soybean, corn, wheat, and cotton than we had previously forecast. So let's talk about why we're seeing some of these price increases. Go to the next slide and we'll see that the global crop outlook shows that we're going to have tighter supplies, particularly for corn and soybeans. Maybe less so for wheat, but obviously wheat demand forecast for 20/21 has really increased. So obviously strong Chinese demand for wheat, corn, and soybeans is also another factor behind higher prices. In the next slide, this is a slide that talks about our first outlook for 2021/22, the sort of the out year. Still seeing very strong prices for most crops, a little bit down on corn, but up on soybeans, wheat, rice, and with cotton sort of returning back to a historical level. This is translating into higher acreage, and the 3-crop total for corn, soybeans, and wheat is projected to reach 227 million acres, which would be the highest level since 2016, really being driven by soybeans, which are forecast up at 6.9 million acres from last year, really reflecting strong futures prices and strong, soybean to corn ratio. So I don't want to ignore livestock, poultry, and dairy. So we'll move on to the next slide. And this slide is one you may remember from Seth's presentation, but we just talked about higher prices for crops, and obviously that's going to affect livestock, poultry, and dairy sectors in the form of higher feed costs. But nonetheless, USDA is projecting total red meat and poultry production to increase approximately 1% over 2020. And 2021 milk production is also forecast to increase by 1.9%. So you'd think maybe with the higher output forecast, we might see some softening in prices, but actually for livestock and poultry, we are expecting prices to rise, and largely due to a recovery in demand and a strong export forecast. Situation's a bit different for dairy. We've got higher milk production, and we still have some large stocks of certain products that are overhanging the market. So the all milk price is actually forecast to come down slightly in 2021, but it's still seeing pretty strong, export demand for dairy. And really what this slide is supposed to sort of convey is that, we need to export to be able to grow in these sectors. While pork is down, exports are down a little bit in 2021, kind of reflecting the situation in China. We're making up ground in some of the other top markets for pork, such as Mexico, Canada, and Japan. And really, to sustain the growth in these sectors, we need to be able to export. So let's go to the next slide. We talked a bit about China. Obviously, we know that they import a lot of pork due to their ASF outbreak that really decimated their inventories. We know that they're recovering, and we're looking at higher production for 2021 for China. But it kind of got me thinking about, well, what do we think longer term? I mean, is China going to be a meat importer? Are they going to be a grain and oilseeds importer? Obviously, we're seeing, tremendous increase in China's import demand for coarse grains, corn in particular, soybeans, reflecting the very high kind of internal prices they have and the need to import these feedstuffs to help rebuild their stocks. So this is actually a slide from Fred Gale's presentation at the Ag Outlook Forum, and I found it really interesting. It really shows that China and Hong Kong are going to remain the top markets for pork and beef in 2030 and show really sizable increases in the import levels. It's really, an issue that pork production in China will recover, will increase, but there are some constraints to how much it can increase with respect to feeding cost and other expenses related to biosecurity, et cetera. And so we still are projecting a fairly robust growth in pork imports and beef imports as well. Poultry, not the top market, but still showing pretty strong growth in imports. Again, consumption trends driving all of this. So, okay, we see a lot of meat imports in the out year. Well, what does that mean for grain and oilseeds? So the next slide, this is also from Fred's presentation. I don't think the soybean slide is particularly surprising. I think they're always going to have, and I'm not a China expert. Let me start off by saying that it's pretty clear from my bio that I don't have expertise in China, but we all had to sort of learn about China because it's become so important. Soybeans, the demand for China's imports of soybeans is going to be driven by continued projected growth in their animals, meat consumption, and vegetable oil consumption, getting up to about a level of 140 million metric tons by 2030. The grain import slide is a really interesting one, and just to note that the 2030 baseline report is based on the WASDE estimates as of October 2020. So I wrote in bold there that obviously our current 2020/21 forecast for China's grain imports is quite a bit higher than what you see in this chart. But nonetheless, I think it's an interesting look at the fact that we still see that there will be an increase in China's grain demand going into the longer term. So lastly, a new slide. Sorry, I know you got a lot of repeats there, but I'll give you a new one and just sort of start off by saying this is meant to be illustrative. It's not exhaustive. It also isn't meant to sort of imply any certain policy decisions or negotiating perspectives. It's really more about my own stock taking about where we've been the past couple of years and where we might be headed. And I don't think any of this is rocket science. It's like I said, it's really more me thinking out loud. And, obviously, as Chris said, we'll learn more about what Catherine Tai is, her views on sort of the trade policy outlook at her hearing on Thursday. But certainly, we all had to sort of dust off our trade statutes and relearn Section 301 and 232 to understand those trade actions that were taken early on in the past administration. For agriculture, that really meant learning about the impacts of retaliatory tariffs on U.S. agricultural trade, obviously had significant impacts on our ability to export, particularly to China. It also had bright spots too. I mean, the China Phase 1 agreement is really a big accomplishment, getting USMCA over the finish line, the bilateral deal with Japan, these were all good things for agriculture. Going back into the trade policy jargon, more recently, kind of coming out of a review of seasonal and perishable commodity issues and concerns, USTR requested USITC to start a Section 201 safeguard investigation on blueberries. The results of that investigation haven't been published yet, but we know that the commissioners did make a negative determination in that case. USITC is still quite busy with the Section 332 investigations. These are fact-finding investigations, several specialty crops, and I think, another report I hopefully hasn't been lost in the shuffle. They've done another report at USTR's request on low or missing MRLs, maximum residue levels. And the first part of that report has come out. The second part, I think, should be coming out at some point in the near future. We'll focus on quantitative assessment of those measures. And AD/CVD, so anti-dumping and countervailing duties, this is affecting both our ag imports and exports. I'll just quickly say probably one that's of interest for agriculture right now is the investigation of phosphate fertilizer from Morocco and Russia. Commerce has put out their final determination, but we're still waiting to see what ITC will do with respect to the final injury determination. I have a feeling I'm running a little low on time. Is that the case, Chris? I think you're on mute.
Please go ahead. I think we're going to be okay.
Okay, well, I'll wrap it up quite quickly here because I know we want to get on to the other speakers and more importantly, the Q&A session. So what am I thinking about now? I've obviously did a lot of thinking about the things on the left-hand side, and I don't think they necessarily go away in a new administration, but we'll just kind of have to see how how they handle some of those issues. But, I think in terms of what's on the horizon, certainly climate change, sustainability, food systems, these aren't new concepts, but I know for myself personally, I've always been really happy to know that there are really strong economists and folks who understand these issues, and I haven't had to learn them yet. So I think that's going to be one of the top things on my reading list is to understand sort of the intersection of these concepts with our understanding of trade. New technologies and regulatory approaches, again, these aren't new, but there are new technologies. And I think particularly in the context of climate change, sustainability, there needs to be more of an open discussion about these things and the ways in which different regulatory approaches can impact welfare and trade and food security, really. And I think that the ERS report study on the EU farm to fork is a good example of starting to look at some of that. Competition issues, I mentioned the seasonal perishable, actions in the last administration. I don't think these concerns go away. We hear a lot about labor as well, both in terms of the cost of labor, availability of labor, and also ways that, some of these sectors, are looking for ways to become more cost effective and efficient in those, in their production methods and harvesting methods, such as automated harvesting and mechanization and things like that. So I think that'll be an interesting issue, kind of cuts across a lot of parts of USDA. We're really talking with our colleagues over in the Ag Research Service and the Ag Marketing Service, a lot of our domestic agencies who are involved in these issues and are closer to them. And then last but never least, the WTO and free trade agreements. So obviously TPA expires on July 1st. I'm doubtful that the UK, EU, and Kenya FTAs will get done, even though we have great negotiating teams on those efforts, but kind of have to wait and see. I'm hoping some of the other panelists might give their thoughts on what the outlook for TPA looks like. We at USDA think a bit about, where are some of the other markets where we'd like to, see greater market opportunities, and particularly where our trading partners have entered into trade agreements amongst themselves that don't include the United States, such as RCEP and the original CPTPP, which we are not a member of. And so Southeast Asia comes to mind. India, I think, is always of interest. And the WTO, I mean, in my view, it really is about multilateral, it's really our best bet for comprehensive reform in agricultural trade, but it's also, I think, going to be very difficult. There's a lot of time that's passed since the last round of negotiations. And I think, it'll be interesting to see how the new Director General, how she sort of points the organization. I think there'll be a bit of a time where obviously there's some other higher issues that, like the appellate body the issue with the appellate body, and just monitoring COVID situation. She's got some initial things she's going to have to work on, but over time it will be interesting to see how the WTO negotiations, enforcement mechanisms, how those sort of evolve over time. And with that, I will say that's the end of my presentation. Next slide, you'll see our website. Please visit it if you want to look at more of the presentations from the Ag Outlook Forum, and a lot of good material on US and international market outlook. Thanks.
Thank you, Sharon. Appreciate that. And now we're going to have Gregg Doud, who just last week accepted a new position as Vice President of Global Situational Awareness and Chief Economist at Aimpoint Research. But Ambassador Dowd just completed serving the last 4 years as Chief Agricultural Negotiator at USTR for the Trump administration, and is considered one of the primary architects of the U.S.-China Phase 1 agreement. Ambassador Dowd also served as President of the Commodity Markets Council before that, and was former Chief Economist to the U.S. Senate Agriculture Committee and for the National Cattlemen's Beef Association. And we look forward to hearing Gregg's views now. Go ahead, Gregg.
Well, thank you, Chris and Sherry, and to the folks on the Farm Foundation. It's good to be back in the private sector. It's good to be back and part of the Farm Foundation as a member of the Farm Foundation Roundtable for several years before I was at USTR, and really happy to return in that capacity, and hopefully at some point here see everyone in person that I haven't seen in a while. First of all, let me say I think my remarks today will be a great compliment to Sharon's presentation. Sharon, excellent presentation. You teed it up. I'm thrilled to be with Aimpoint now and back in the private sector as a commodity analyst, although I'm not completely back yet because I don't have a PowerPoint slide deck yet. So I won't have any of that today, but I think actually what I have to say tees or parallels very, very well with exactly what you had. And so let's recap 2020 just briefly, and then talk about the outlook for 2021. in a way that we would as commodity analysts in the private sector. 2020 was a really good year for U.S. ag exports after a really slow start. And in fact, what's interesting is that if you look at the last 3 months of 2020 and U.S. ag exports to China, those are 3 of the 4 best months in history of ag exports to China. And in fact, 55% of what we sent to China was in October, November, and December. And we'll get back to that. That's going to be a really important thing going forward here, I think. And we did that in the midst of a pandemic. And I think we all understand that. We all understand the importance of China phase 1. But China phase 1 didn't enter into force until February 14th. And it really didn't kick in until after March 2nd, when the tariff exclusions were granted by China. And Chris, I appreciate your comment, but I will tell you, I want to give a shout out to Sharon Bomer and her successor, Dr. Julie Callahan. And Sharon, these are former colleagues of yours as well, I know. And it was a tremendous team at USTR that worked on the China phase 1 ag agreement. There was 33 negotiating sessions over the course of a year, hundreds of hours we spent on this, bringing this agreement home. In the agreement, there are some 57 things, 57 structural changes, I believe, that we negotiated. And I think today we are probably at somewhere around 51 to 3 of those that are complete. And overall, the result of that is that before we started those negotiations, we had about 1,500 facilities in the U.S. eligible to export products, agricultural products to China. So that would have been beef processing facilities, dairy facilities, pet food facilities, 1,500 of those. Today, we now have well over 4,000 facilities in the U.S. eligible to export their products to China. And I think this is a very big thing to keep in mind as we go forward with this. And Sharon talked about bulk commodities, but there are so many other processed product and finished products and dairy products, et cetera, that we have access to China now that we never had before. And this is a major change. And I think it's really, the improvements in market access that we now have in place are going to treat us well here going forward. But for the outlook for 2021, there are several points I want to make here today. And the first one is, in order to be successful going forward, we have to be price competitive. And we have to be competitive in the world marketplace on price, not just to China, but everywhere in the world. And this is something that's really important. I think one of the things benefiting us in that regard that is very different than was the case a year ago or even before that is the value of the US dollar. So much of our challenge in the last few years has been a strong dollar, and particularly as we deal with competition from Brazil. And the weakness in the Brazilian real against the dollar a year ago and 2 years ago, that was giving us fits. And this situation has changed to some extent, and it'll be important to keep an eye on that going forward. I think the second thing we have to keep in mind is back what I talked about. We've gone from basically September until now in our bulk ag exports, wheat, corn, and soybeans, grain, sorghum to some respect. Folks, we have been completely maxed out in what we're doing. If you talk to the grain companies, our infrastructure, for all intents and purposes, we may squeeze a boat in here or there, but we have really maxed out our infrastructure here in the last few months and what we can sell to China or to anybody for that matter in terms of wheat, corn, and soybeans. And this is really important going forward, again, with regard to that competition with Brazil. We have a window. The Brazilians have a window. Our window is not going to expand, folks. Brazil's not going to back down in terms of the production, especially in soybeans and in some respect corn as well, what they're doing. So we have to be able to maximize what we can do in that window. And that begins, and the conversation, I think, for another day here, and I think this is a great Farm Foundation conversation, is about infrastructure. So I think that's the second point to make. The third point that I think is the key point I want to make today, Chris, is that as an ag economist, and I love USDA's outlook charts every year because it gives you a target to shoot at and things to talk about. And Sharon's laughing here. That's exactly right. But one of the things we know as ag economists, when you do long-term models, the lines are smooth. The forecast is always a very straight line and smooth. Here's my point today. This is not going to be smooth. The volatility that we are going to see going forward as a result of China and everything else going on, I think is something that we all have to wrap our head around here a little bit. And what do I mean by that? What I mean, Chris, is that going forward, I think China has the potential to import 30 million tons of corn from the world. But as I look at the situation today, pork prices in China are falling. You have now, you tripped the other day in China, $11 a bushel corn. Now, you know, we're watching how that's all these things. You look at crush margins for soybeans, you look at all these things going on in China, and going forward, Sharon, you know, 2 or 3 years down the road, I can't tell you whether China is going to import 5 million tons of corn or 30 million tons of corn. We all have to keep that in mind. This is not going to be smooth. And that is just really an important thing going forward for us. Another key point with regard to corn demand in China is something that in the conversations we had with China now a year and a half, almost 2 years ago, was something that happened January of 2020 that I think fundamentally in terms of global demand may be one of the biggest things to ever happen in the history of world agriculture. And that is China made the decision to ban the swill feeding of hogs. They made the decision to stop feeding food scraps to pigs. Now, keep in mind, half of the hogs on the planet are in China. And depending on how you look at it, the best I can tell you is maybe half of those pigs at times were fed food scraps, swill fed. Now, China lost about 40% of their hogs due to African swine fever. And the volatility, again, that's the key word here, is as they come back online, it's not going to be a smooth line. They're going to have increase in herd and decrease in herd. But the one thing that is going to be consistent is they expand more into Western style confinement operations. If you're going to do that, the next thing you need to do before you fill that facility full of pigs is you better lay in the feed supply. And that's what we're seeing going on here. And I think that is a very different dynamic for the world to deal with in terms of corn and soybean demand going forward. I think we have to, again, we have to look at China's infrastructure as well. What are they going to do? We just saw their new 5-year plan in terms of they expect to increase corn production. Obviously, their demand for soybeans around the world is going to be really, really important. And I think there's an interesting thing here. During the transition of what was going on during my tenure at USTR, we have to keep in mind that China's demand for soybeans, if you go back and look at Sharon's chart, there's a blip there. And China's demand for soybeans went from 94 million tons to 82.5 million tons. And then 2 years later, we've gone from 82. Now USDA says 100 million tons. And you look at Sharon's chart and you don't see that that's a very big blip. That's a huge blip, folks. That's just a really significant change in the demand for soybeans in the world driven by one country. And again, that speaks to my point about volatility going forward. A couple final thoughts here, Chris. We haven't talked about meat yet. And I think Sharon's charts there are exactly right. The first point I would make is we now have access to China for US meat, the likes of which we've never seen before. We have a drought in Brazil. We got to keep an eye on that. We have the situation in Australia. They had a drought. Now they've got rain, and watch how that is going to unfold. But I saw these numbers the other day, Sharon, and it really spoke volumes to me. 2 years ago, China imported $11 billion in beef, pork, and poultry. In 2020, they imported $28 billion in beef, pork, and poultry. 2 years ago, China's total ag imports from the world were 136 billion. If the numbers are right, the latest numbers that I've seen, China's total ag imports from the world in 2020 were $170 billion. that trend is obviously something we need to keep in mind. And to me, that is more of a consumer finished product meat discussion than it is maybe a bulk grain soybean kind of conversation, but they all, as we know, go hand in hand. So quickly, just kind of going down through my final comments for the outlook for 2021. Wheat to me looks pretty steady. We've got a rebound in the Black Sea we have to keep an eye on, and what the Russians are going to do in terms of limiting wheat exports. On soybeans, we've talked about from 94 to 82.5 to 100. What the key there is to watch crush margins in China and see what they're going to do. Corn, as I said, it could be anywhere from 5 to 30 million tons. I don't know. It depends on the price of corn in China. It depends on how many hogs are in China and how much money folks feeding hogs in China can make, and whether there's profitability there to import feed grains. On the grain sorghum side, I will tell you, my opinion is China's going to buy every single kernel of it. I think the demand for grain sorghum in China is really remarkable, and we're seeing that. And as Sharon alluded to on cotton, I think it's a function of the strength in the global economy and the demand for the finished product, just as she indicated, that's going to determine what that looks like. So final comment I'll make here, Chris, before I turn it over is that, you know, if you look at what we've done in terms of exports here in recent months, we've done extremely well. To a point where we begin to have a conversation about what we have left in the bin here, and I think it remains to be seen. But before we get to our new crop supplies here, this thing could get pretty interesting and pretty volatile going forward. And I think that's my theme and message today here is volatility. So with that, I'll turn it back to you.
Thank you, Gregg, and thank everyone for the questions that are starting to fill the queue right now. And now we will hear from one of our major agricultural employers with Barr, a senior economist at John Deere. Ms. Barr manages a team of economists who look at industry trends and the agricultural markets globally. Since joining Deere a decade ago, she's had multiple roles, including manager of forecasts and analytics for worldwide part services and analysis of Latin America. Before joining John Deere, Ms. Barr also worked in the finance industry as well. So let's hear it and take it away for Kanlaya. Thank you.
Thank you, Chris, and thank you, Ambassador Doud, and also Sharon for your great comment, excellent summary. Well, I want to thank you also the opportunity to be here today and join you on this important discussion. I was born and raised in Thailand, rural Thailand, in the middle of the rice country. When I left Thailand about 2 decades ago, we were still harvesting and planting rice with hand. We used water buffalo to plow the land. So what the 20 years has really changed the way we do our production. And all of this is contributed to technology and also trade. So this topic is definitely near and dear to my heart. And because I am from the private sector, I have to put on my disclaimer here that what I have to say in the following few minutes here is my own opinion and is not necessarily that of my employer. So I am an ag economist by training and also been following global trade very closely over the past few years, and especially for previous panelists' comments, things have really changed significantly. So this relationship and the ag commodities, especially with China and the US, really change the market dynamic. And also, I also focus a lot on the other importers and exporters to understand how that impact the farmers' financials. So what I would like to discuss today are the 3 observations in the following area. So first, I'll talk a little more on the progress, what trade has done to the world in terms of reducing poverty and also the tailwind for trade and optimism that we have for global trade here. And then second, just to touch on the short-term ag outlook, which Ambassador Doud and also Sharon already touched on a lot of that as well. And then finally, the long-term trend, what we're seeing that would impact ag landscape as well as the global ag trade as well. So let me start with the first area. The next slide, please. So Economist magazine reported a few years ago a striking progress in eradicating extreme poverty. If you look at the graph on the right here, 1980, over 40% of the world's population were extremely poor, according to the World Bank. And when I need to emphasize, when I say poor, this is not in many rich countries defined as poor, but in absolute destitute. At best, they barely have enough to pay for their food, and at worst, they starved. Now, since then, the number of the people in this condition has fallen by about 1 billion people. It's still 3 times the size of the US population. By 2016, this number has fallen below 10%. The Brookings Institute, a think tank, calculates that someone escapes poverty, extreme poverty, every 1.2 seconds. Now, this progress is impressive and unprecedented, especially as we look at the number of population has increased from 4.5 billion in 1980s all the way up to 7 billion in 2016. Now, undoubtedly, in addition to increasing investment in technology, globalization plays a big role enabling this progress. We have seen number of trade agreements triple from 75 agreements in 1995 to over 270 agreements in 2015, which allow global trade to balloon triple what we have seen during time period. The tailwind, I want to emphasize this, that we have seen this significant progress, but the tailwind is still continues as well as the world population forecast to grow over 9 billion people by 2050. And 2/3 of those people is likely gonna be living in an urban setting. So what does that mean? They make more money, they're gonna be buying more food, they're gonna want better quality food. So those are reasons for us to be optimistic about agriculture and also agricultural trade. So now next slide, please. So when it comes to U.S. ag sector, which is export is a critical source of income, and Sharon touched a lot of this already. I just want to point out that over 20% of the U.S. production, agricultural production, is exported, and that number is different by crop, by sectors. For example, in the dairy and proteins, between 10 and 25% of our dairy proteins production was exported. For corn, it's about 20% and 50% for rice, for wheat, and soybeans. And if you look at for the fruit and nuts, for tree nuts, almond, walnuts, pistachio, over 60% were exported. So the export market is definitely important for the U.S. agriculture. And as you can see here, that brings me to the second observation that I would like to offer here is, while in 2021, we expect USDA forecast a record year, right, with the export hitting over 157 billion next year. But if you look back over the last 10 years, since 2010 until now, it seems like also that the total US ag export have been mostly fluctuated around 140 billion, which bring me to my last observation about the long-term trend in agricultural trade. Next slide, please. Over the next 4 slides, I have about 4 slides left. I'll touch a little bit on the key important development that influence ag trade in the long term. So this slide here, you can see that on the left side, over the past 20 years, from 2000 until 2020, about the global production for grain and oilseeds increased over 50%. Now on the right map, you can see that a lot of this increasing came from South America and the former Soviet Union countries. South America see over 150% increase during this time, and very similar number for Russia. And I already saw some of the questions asking about the Russian, why they're not importing any more grain. Well, they're making a lot more now. So they're actually going to turn into the exporters of those commodities. Now, and these countries becoming emerging breadbasket for the world. Within the last 2 decades, share of US export for a lot of the bulk commodities has been declining. So now Russia is the #1 world exporter for wheat. Brazil is the #1 world exporter for soybeans. Between Brazil, Argentina, and Ukraine, they combined together account for over half of the global corn export. With more infrastructure, which Ambassador Dowd also touched earlier, these countries over the next few years gonna become more competitive. The pricing, the cost competitiveness, that could make them even more competitive there. And therefore, this only gives rises to importance of infrastructure investment within the US to allow us to be more competitive, especially in this exporting market. Next slide, please. Now, the other part that I was planning to talk about, Investor Doud already talked about that too, the importance of the foreign exchange, which continue to play a big role. Weak Brazilian real over the past few years already provided export competitiveness for Brazilian farmers amid the low crop price environment. Now, IHS Markit economics forecast that US dollar is going to weaken over the next few years, but we all know that forecasters didn't get a D- during the past year for forecasting performance. So that's continued to be something we have to monitor closely, but the FX market is volatile. It could be unpredictable. And this is something that our producers have to really keep an eye on. This brings me to my last point here, that when you look forward, I'm not talking about next year, right? This is the next 5 years, the next 7 years here, agricultural landscape is changing, and it will change the landscape of agricultural trade as well. Consumer trends, which also have been taught, Sharon touched earlier too, about sustainability, about climate change, that's gonna drive agricultural practice. I believe it's gonna drive the practice differently, policies, risk management, and also trade in years to come. We have seen increasing numbers of companies looking to be carbon neutral, increasing opportunities for ag sector to play a big role in sustainability and climate change. Give you an example. For example, changing agricultural practices to increase carbon sequestration, such as no-till, maybe doing cover crops. Those can provide some financial benefit for ag producers. And also, if producers adopting regenerative or sustainable practices, this can also help them. But there could be also a deterrent for some other producers as well. At least a recent example, France's largest bank, BNP Paribas, pledged recently to stop financing firms producing or buying either beef or soybeans cultivated from land in the Amazon cleared or converted after 2008. Or there's some countries that announced about potential ban on crops that are not produced sustainably. So all of this is a new trend. And next slide, please. And I think this is a trend that is driven not just by policy, but driven by consumers, by investors, and by many social media influencers. So it has the grassroots fundamental of this that could lead to the change that consumers want. And that will significantly affect the way agricultural industry operates in the years to come. But I am encouraged by many sustainability efforts that's already in place in the past several years and more in the pipeline that would lead to better outcomes for stakeholders. And this effort will continue to help open doors for US ag export for years to come. And with that, I'll end my comment here. And thank you again for your time. And thank you for this opportunity to share my thought here. Thanks.
Thank you for that presentation, Kanlaya. And lastly, we have Cassandra Kuball, who is Vice President for Michael Torrey Associates, where she works on legislative and regulatory issues in food and agriculture. Before coming to Torrey Associates, she was Vice President for Public Affairs at Edelman, focusing on clients and commodities, the supply chain, and global trade. Cassandra also worked in international trade and biotechnology at the Corn Refiners Association as well. And go ahead, Cassandra, we look forward to your discussion.
Thanks, Chris. And it's a pleasure to be part of this elite panel. And I am your lone non-economist on here. So I'll be coming at this a little bit more directly from a policy perspective, but I think everyone did such a great job of setting everything up and even touched on little pieces that I'm going to bring it back into from that policy angle as we're looking into this new Congress, this new administration. So 4 years ago, I always like to say this, especially when I was leading coalitions, is with the Trump administration, for those of us in trade policy, we basically took our playbook and ripped it up. We're in a whole new era for working on trade policy, for our engagement with individual markets, to our approach overall, to the way we use trade remedy tools. Now, some folks think, oh, we're just gonna reset, we're gonna go back, it's gonna be same as normal. I don't agree with that whatsoever. The word reset has been used quite a bit lately when talking about the Biden administration on trade policy. I actually think it's more of a rebrand. truthfully. What we're seeing is still very much care about the commitments that we've engaged in over the past few years that's been set up by the Trump administration. China is a perfect example that we've touched on quite a bit today, but it doesn't stop there. So what we're going to be watching for is seeing how the Biden administration is going to be setting itself up. And that's why I'm talking about a rebrand. So it's not going back, we're not going back to square one. And I don't think food and agriculture in itself necessarily wants to start from square one either. So what it'll come down to is this approach. I think we'll see a little bit different twist. I think we've touched on some of these things today where we're working a little bit less in a vacuum. Think climate policy, for example. Infrastructure, and I'll go a little bit deeper and a little bit on that. And then to a degree, a little bit of a public affairs campaign is taking place. And that is what we're seeing right now at the administration in re-engaging, for instance, on the Paris Climate Accord, to reaffirming commitments at the WTO, to re-engaging at the WHO. So it's all these multilateral commitments that we're seeing their re-engagement with. And that's what I'm calling a little bit of a public affairs campaign that they're doing, from what I assume is going to be a little bit of a trust building exercise with partners. And that's where I think some folks are wondering, like, why aren't we already talking about re-engaging, jumping into CPTPP, going toe-to-toe on EU, starting things up like full on. And we've got this pandemic in front of us, and understandably, what they're going to be doing is going to be focusing on the economy. Now, I think you can talk and chew gum at the same time. And when you talk trade, you're talking economy. So that's certainly where I'm hoping to watch and see how they're able to cleave those two. And a lot of it's going to be coming back to domestic policy. And this doesn't just mean resetting with our trade partners. This is also in our own domestic policy landscape with Congress. I think Sharon touched a little bit on TPA, Trade Promotion Authority, and noted that that's going to be up July 1. That's going to be a big deal. I had the pleasure of going up to the Hill and lobbying for the last go on TPA. It's never easy, even though for those of us in the trade policy space that we think it's kind of a needed thing to be able to engage in comprehensive trade agreement negotiations. But there's questions coming out of the last 4 years and seeing unilateral actions by Trump administration. It's like, do we want to see this authority? And that's going to be questioned heavily, especially by some very progressive sectors within the Democratic Party that are just not typically pro-trade in general. So were they not going to want to maybe put all that energy there? So that is, I wish I had a crystal ball. I can't say yes or no. I do think, because it's never been an easy thing getting TPA or its predecessors passed, I think it will also be an uphill battle. And this is where if we're not already engaging as industry, we need to start laying that groundwork to that, especially if we really want to be pushing for this administration to engage in comprehensive trade agreements. So as I mentioned, we're no longer working in these silos, and I have to say silos, we're in agriculture here. Speaking from food and ag perspective, and I thought a lot about this when we were going through the renegotiation of NAFTA. For a long time, we cared about a handful of chapters that we really zeroed in on: agriculture market access, sanitary, phytosanitary chapter, technical barriers to trade, country of origin labeling, and then maybe a handful of others, depending on your industry. I've seen nowadays that when we're talking about trade agreements negotiation there, we're going to be expanding into other chapters. The environment and labor chapters were new under USMCA, as not something that was heavily engaged in by way of food and agriculture industry. I don't think that's going to be the case this next go for any other agreement that we will be entering into. The other thing I wanted to note, and I'm kind of jumping around here, so I apologize, is on US domestic policy is about, I'm going to actually talk about some of these other examples. So climate, for instance. Sorry, I jumped around my notes here. This is where we need to bring it back and understand how what we're doing here on domestic policy. So we're not going to be, when we're going into negotiations, we're going to be asked by our partners, or we're going to lead in those different areas. And food and agriculture very much should be at the table and engaging in that. We need to be able to start laying that foundation, though, by how we approach it in the domestic sense. We have seen a lot of work already in the past few months by industry, by Congress, by the administration with EOs on climate policy as an example. And that is something that I hope that as we engage on setting up that domestic policy scheme in commitments, as we think about things such as getting really technical in this area, for instance, how are we going to be taking quantitative analysis? How is that going to translate over into a trade agreement for commitments? What are we pulling in from our UN Paris Climate Accord commitments? How is that all going to intersect? And that is something I don't think I haven't seen the light bulb moments on how that's all going to work yet, but that is very much, I think, the challenge that's ahead of us. But it's not just climate policy. I probably am focusing a lot more on that than I need to be. It's also things like infrastructure. Gregg mentioned this. We need to be thinking about how we are setting up our infrastructure that's going to support not only just broad economy, but how it's going to help us in the export side of things and imports. We need those inputs too to be able to create product to export. And that's not just in manufacturing, that's in food and agriculture and manufacturing, for instance. And that is rail, shipping, containers allotment, availability. Those are all things that are a major struggle right now that I don't think are always top of mind when we say infrastructure. I think things like roads and bridges come to mind, but they don't understand how that whole network comes together to be able to support the larger economy in areas such as trade. So these are some of the things that I think we really need to be pulling in, and as we're laying a lot of foundational work in the domestic policy area, we need to be thinking about too, how that's going to directly or indirectly impact our abilities to really be competitive on that international stage. I think that gets into a lot of the things such as that volatility side of things that have also been mentioned before. Now I'm going to switch it over a little bit to markets. I've been reflecting a lot on us domestically, but of course we got to be thinking about the international scene. And I'm not going to go by market. I think we touched on China quite a bit. There's been pretty strong eye on that for the last several years. I don't think we should keep taking our eye off the ball there whatsoever. We need to make sure that they adhere to their commitments, just as I believe we need to watch for in any agreement that we enter into, whether it be USMCA or a phase 1 deal with China. But also to that point that Gregg mentioned on volatility is the fact that we need to also be thinking about how we can expand elsewhere. We are in the need to diversify. I think China is a great market. You can't ignore it because you do get those big buys. So obviously, a lot of times it's in bulk commodities, though what is great about the phase 1 agreement is got to dealing with a lot of those issues in the qualitative sense that, Gregg, I'm so happy you mentioned those because I don't think they get enough light when we talk about what was achieved under phase 1 and have been the biggest price struggle for industry for decades. So what are we going to be doing? How are we going to be looking at this? And this is where I'm really hoping that we're going to have an extremely strategic approach, because we've got agreements with pretty much our largest partners, except for what we backed out of at TPP, now CPTPP. I want to make sure that when US is thinking about this, we're not just thinking about moving in bulk, we're not just moving by dollars, but we're setting ourselves up strategically, where we're getting into, as I was talking about, some of those other chapters beyond the market access side of things. Want to be able to make sure that we're being able to think about how we get in the areas of value added, because that's where US agriculture is going. It's going well beyond bulk. We're getting into specialty grains. The dairy industry has diversified quite a bit since I've been working in it. My first job here is US Dairy Expert Council. And then how are we going to be thinking about that in our alliances? And this is something that we're watching closely. What I believe Biden administration has started a little bit with is what I understand is called the Quad, where they're setting up that strategic alliance in Asia. I think a little bit of a stand-in for what could be CPTPP. And it's how they're going to engage that way. So India, that's a tough market. It's not one that I think we're going to be able to win at in the world of bulk commodities, not with what we witness in their own programs. If you follow Indian market, it's very difficult right now to watch what they're dealing with their own domestic agriculture industry. But where we do see light and opportunity is in specialty products and those value addeds. And that is, I think, where we can really get our toe in and be able to be a player for US goods. Other markets like Southeast Asia, I think, is something where that quad relationship, I hope, helps us be able to build in and engage in that market. That's just where we can really work to strengthen that and that utilize our relationship too with Japan in particular. Again, this is going to be a little bit more in that specialty with bulk to an extent. And then EUs, that's a tough one. It's not an overnight one. TTIP was a long slog of negotiations that kind of puttered out. I was there for a number of those rounds. And the issues that were there then remain there now. And I don't know where we're going to be able to get past them. And this is where I hope that we can maybe find inroads there. What I have been convinced of is that no two agreements will look alike. When we say comprehensive, to me, there's always a series of about 20 plus chapters that come to mind, but that's not always going to be the case. Where I think is how can we get that balance of comprehensive, but also doable, though not leaving out major sectors. So when we talk about EU, for instance, there has been talk about doing in different phases, for instance. Concern there would be if we entered into a phase that did not include food and agriculture at the outset, will that even be something that would happen even down the road, the remote chance? And I don't think that's the case. And so this is something in the policy space for those of us and who work on the lobbying end of it too, I know raised extensively with Congress, is when we get to these agreements, it has to be as comprehensive as possible, but also doable at the end of the day. So it's being able to find that sweet spot. And that's where I really look to this new USTR and say, Godspeed in that department. So closing up here is we have a lot ahead of us. Volatility is very much something that should be top of mind. Therefore, I think we want to be as strategic as possible and think about how we can really build in and be diversified in our way of engaging in new markets, re-engaging and working with current markets that we've already had strong relationships with, and how we can continue to build those. And then also make sure that for those of us, especially in the deep policy root side of it, how that we're thinking comprehensively too, from our engaging on the domestic issues that we're so deeply encased in right now, for instance, in the climate policy space, making sure that can be pulled over into our international trade efforts as the US continues to engage there. So thank you.
Thank you for that, Cassandra. And you know, wow, I'm going through all of this, and there's a tremendous amount to get to in every part of the world here. But we certainly had a really major theme with China, and a lot of questions, a lot of related issues with China. I was on a call this morning with Senator Chuck Grassley, and I asked him about Catherine Tai's confirmation and what he wanted to hear about. And he said he wants to know how we were going to hold China to its commitments of $80 billion in agricultural purchases over 2 years. What are we going to do there? That was something he emphasized. USDA forecast, you know, it's not calendar year, but fiscal year 2021, China at $31.5 billion. That's a record level, but that is not the phase one agreement. That's not the commitment that was made, I understand. You know, we were talking about $80 billion over 2 years. So how does this get reconciled when China is also 20% plus of US agricultural exports? How do we enforce the agreement going forward? And we'll start with Gregg, but I'd love to hear from any of you on that.
Well, Chris, I think you're asking an important question, but I think the answer to that question depends on our competitiveness in the world. And during our conversations, it was clear that China had, every desire to buy U.S. agricultural commodities. They made it clear, look, the vice minister said to me, look, Gregg, we understand that the quality of U.S. agricultural products is the best in the world. And we had hours and hours of conversations about how to bring our two regulatory systems together so we could better understand each other, better, facilitate this trade. They wanted this trade, but there was one point that he consistently made. He said, Gregg, at the end of the day, you still have to be price competitive. And I understand that of course we do. And that's, you have to have the commodity in order to sell it. And I think what we're witnessing right now in the last 6 months is we have just about maxed out. I don't want to say completely maxed out, but just about maxed out what we can do in a 6-month period here. We have been rocking and rolling. Chris, I got to tell you, just 3 weeks ago, I was out, spent a week driving 1,400 miles through all of Kansas. And we are cleaning up piles of grain out in Western Kansas, the likes of which are remarkable. They are moving out of here. And so, we have to be able to continue to grow the stuff and do this. And I want to make, one point on that. The way forward in all of this is the use of technology in agriculture. And that is what we have to help everybody understand, is to improve environmental quality, to improve our competitiveness in the world. It's going to take technology. And in the Farm Foundation, we have to be a leading advocate in helping people understand we are not going to apologize for the use of technology in agriculture. That's a roundabout way of answering your question, but the answer is you've got to grow it in order to sell it.
Anybody else want to weigh in on that real quickly?
Well, I would just make a quick comment here. I completely agree with the use of technology, and looking at the suite of technology even we have right now, just existing technologies, it could potentially reduce the cost of farm inputs, reduce the cost of fuel. So with the things that we have available right now, I think that could already could provide up to $40 per acre for economic value for our customers if we picking adopting technology that we have. So definitely that's a key important part.
So another question that really goes more to Gregg, in terms of what you learned about China while working on the phase 1. And while everybody, most of us, when we hear, unless you're maybe a lobbyist, if you hear the words FIDO and sanitary, your eyes kind of glaze over, unless you're Jackie Fatka, who wants to know about the technical changes and how will you expect those to remain in effect?
It's a great question. And the answer is so much I learned. And I think so much China learned in the course of these discussions. The frustration sometimes was between the vice minister and his career, bureaucratic official who really hadn't traveled as much around the world as he had, didn't have really the understanding of the issue. And so much of it was just talking through and helping folks understand how the United States regulates an issue, how we see it, why we do what we do, and really facilitating that dialogue. Almost without exception, it took hours and hours and hours to do that. And once we did that, and we really got down to the peanut of what the question was by the Chinese official, once we got to that eureka moment, Chris, then we could fix the problem. But I will tell you, through this experience, the language barrier was enormous. So much broad, the language challenges were so much more difficult than I think. The vice minister speaking English, we just took hours and hours and hours to figure this out. And I will, so many stories that I could tell about getting to that eureka moment and realizing this is what the concern was. And then realizing, well, the answer to that in terms of traceability, or the answer to that on these questions, is quite simple. And here it is. And once we got to that point, we made huge progress and we were able to break through and get things done. but neither one of our countries had ever spent this much time together trying to sort through these things. And I'm always struck when you ask these questions is one of the last things that the vice minister said to me when after the signing ceremony, we were in the red room at the White House signing the side agreements on a couple of things. And he looked over at me and he said, Gregg, China's never done anything like this with any other country before. And I looked at him, I said, Vice Minister, neither have we. This was truly historic in terms of our ability to come together and do this. And I think the point now for me, and people ask, well, what about a phase 2? Well, phase 2 is going to involve a lot of state charioting enterprises in China and subsidies in that regard. And those are very, very difficult issues with China, let me tell you. But in terms of these structural changes, in terms of the SPS issues you mentioned in agriculture, what I want folks to understand is I really, truly believe now that as a result of these hundreds of hours, we have a rapport between our two countries, food safety, technical, APHIS, regulatory officials. And when an issue comes up, we now have a relationship where we can get on the phone and talk through these things, unlike anything we have ever been able to do before.
We're going to stick with China real quick. And another question, hey, I live in Iowa. We got to ask this question, of course. China recently made a substantial ethanol purchase. Is that a token thing, or are they going to be pursuing more? I think the National Ethanol Conference, they talked last week about maybe China buying $200 million worth of ethanol from us this year. But what's the long-term outlook there?
It's a great question. And the answer is we spent a lot of time at my level, at my boss's level, even above that level, talking about ethanol trade between our two countries. And my sense is that China is very interested in this. My sense is that China really is trying to think through this whole notion of infrastructure for the use of ethanol and blending. It took us a long time to build that infrastructure in the United States. I think China is still thinking through how it plans to do that as well, or are they going to go, how much of this is going to be electric cars, how much of this is going to be gasoline, how much of ethanol we're going to need, where we need to go to put this infrastructure. It's going to take some time to think through that, and I think we have to be patient with them, but I think they're very interested in it.
So each of you guys at some point talked a little bit about infrastructure, and we've been having the same conversation about infrastructure in the United States now for, it seems like at least a decade. At one time, this was like the thing that, when you had earmarks, this was the thing that you brought home if you were a congressman. You brought home the new bridge, you brought home the levee improvements, et cetera. We don't have that anymore because of some of these issues in Congress. But what needs to be the driving force, basically, to make the arteries and clear out and to begin to expand? Because we know this is supposed to be our advantage over Brazil, but they're building some highways. They've got some plans to build railroads through Mato Grosso and stuff like that. How do we stay ahead in our one big advantage, which is infrastructure? Cassandra, you want to start us off a little bit more with that?
Well, we're getting back into earmarks, so that can make it a bit of a game changer. I do think it needs to be, you're right. I feel there's been that longstanding joke, I think, of the past year is every week was infrastructure week up on the Hill. And what do we need to do to get past that? And it probably will take earmarks coming back to life to probably get over a little that hump. I do think it is also a rebrand, to get back to my initial theme of what we need to do to be able to think about things in a much bigger picture. And so it can't be just by region or district. It has to be, how is it going to really push the economy? And maybe this is that very position that the Biden administration is finding themselves in, that they can make that case. Now, it's going to how you rectify that with the dollar amount, and that's probably how it might come down to negotiating off with earmarks.
Anybody else want to weigh in a little bit there? we're good on the infrastructure question, and we want to see it. Somebody else can figure out how to pay for it, right? So Sharon, there was also discussion of a little bit about, Russia going from being the great importer. You were the Soviet Union expert. And this also plays in on climate change somewhat. The forecast is that one of the biggest beneficiaries of a warmer climate is Russia. I'm not sure if you're still paying a lot of attention at USDA with what's happening with Russia, but can you elaborate a little bit on where they're at as a growing competitor?
Yeah, really, it's an amazing transformation. It really does kind of take me back to my early days when we were so focused on, U.S. grain and oilseed exports to the Soviet Union and then to Russia. We knew they had the production capability, but obviously quite inefficient. And, they were importing so much to sort of develop their livestock, and then to kind of see it all switch, where we then all of a sudden started exporting, all this livestock, particularly poultry, to them, was really what I ended up working on quite a bit, through the 90s into the 2000s with their WTO accession and, as a commodity analyst, and it sort of flipped, a bit. And obviously on the grain side, they're a real powerhouse. Like you said, the climate is part of it. They're competitive. Ukraine as well. Kazakhstan, obviously, we kind of include in that group. I don't know exactly where we are in the sort of out year forecasts. We have some really still good expertise in USDA, on Russia and the grains analysis. But yeah, no, it was an interesting thing to watch. And I just also wanted to mention, I think there was a question in the chat about why Russia doesn't import from us anymore. And I think I had to go back and look how long this has been in place. But, after sort of the, tensions over Ukraine and human rights, Russia decided to ban imports of food and ag products, mostly, most of them from the US, from the EU, from others. And so, yeah, we've kind of been out of that market for some time now, across the board. So in that respect, I haven't paid as much attention because we know we've got this ban, although presumably some stuff still enters in the gray market. But yeah, definitely on the, it's really stunning to me. I know we had a baseline report that had some really good charts and kind of forecast on just how, their production has turned around. Obviously, weather is a big issue with the variability in yields, but I think they're here to stay, would be my impression of it.
Anybody else want to weigh in there?
Just a quick note that I think they also have a lot of emphasis on infrastructure improvement as well. And I wonder how much of the Road Belt initiative from China that will try to open up that market in the northern part of the Europe and continent. So I think that would be something that could give them more competitive advantage as well.
So we really like talking about China. We don't seem to like talking much about the European Union. I remember, I think the first big live event I went to after the pandemic was down in Kansas City, where Ambassador Dowd, you spoke about the Farm to Fork initiative and concerns about where the EU was at with that. Sharon, you mentioned the USDA report that was put out on the situation as well, but the Senate Foreign Relations Committee back in November as well said, for us to really decouple from China more, we need to have better relations, including better trade and expansion with the European Union. How do we get beyond the situation with geographical indicators, the biotechnology situation? I mean, there are 500 million fairly wealthy consumers in the European Union that we feel like we need to be having more expansion there. Can we eventually get a transatlantic trade agreement that would work out for American agriculture?
How honestly do you want me to answer that question, Chris?
It's really got to be perfectly honest.
Well, Cassandra mentioned it, Sharon mentioned it, and I don't call, as you know, Chris, I don't call it the Farm to Fork initiative. I call it the Farm to Empty Fork initiative. because that's what we're talking about in Europe if they do what they have on that piece of paper. You know, if you look at what they're doing on biofuels, if you look at what they're doing on all these different issues, there's a common thread if you pull the thread and follow it all the way back, and it's very simple. It's straight up protectionism. There's no arguing the point. They seem to want to use the lack of technology as a way to move forward and say that's good for the climate. That's not good for the climate. That, you know, as we USTR talked to them saying, well, if you ban the newer versions of technology and pesticides, the result is farmers are going to go back and use the older stuff that's harder on the environment. And their response was, well, yeah, we're going to ban that too. It is a really remarkable mindset that they have themselves in. But it is, you know, the common thread is I'm not going to sugarcoat it. It's just straight up protectionism.
I think to add to that is I don't think we should be thinking about it just as direct one-on-one with the EU. I don't think we're going to get far there. Where I do see is there's opportunities for engaging, building relationships, maybe strengthening some of those areas by way of WTO. This might be my little wave the WTO flag. And they have extended a hand in the last couple of weeks as the US has recommitted some engagement there, though it's not like under a Biden administration, we're saying, we love everything at the WTO. It's working perfectly. It's not that. That's far from the case. But where EU has pointed out where they are in alignment with the United States and our concerns for some overall functioning, not just the appellate body, but in other areas too at the WTO. This might be probably some of those first steps on building that relationship with the EU. Now, getting into the food and agriculture issues specifically, that's going to be difficult. It's going to be strategic. I think that's where we're getting smart on working around on the UN side of things on climate. This might be where we're able to insert a little bit more leadership over the EU over time. I just don't see it overnight.
Yeah, I can just add, I had two thoughts. One, something I meant to mention, sort of thinking about new technologies and regulatory approaches. I mean, one of the WTO cases I'm kind of trying to watch is Malaysia with the EU on palm oil, and the fact that some of the, and I think one of our previous speakers I think it might have been Kanlaya, talked about, you know, the bank saying, you know, if this is coming from the Amazon, we aren't going to finance it because we don't agree with the production practice. So, you know, there is a WTO case on palm oil and EU restrictions on using that in their biofuels. And so that'll be an interesting case to follow from a trade law sort of perspective. But, you know, I noticed a question in the Q&A about, you know, what is the impact on the US from farm to fork? And, you know, to the extent to which, and I think this is, you know, you can see this from the ERS research, you know, to the extent to which those policies are translated into trade policies, and not just translated into trade policies in the EU, but somehow then translated to other countries who are very dependent on the EU market, that really starts to have some significant impacts on the US and on prices and really on food security as well. So I think, you know, in the near term, obviously, there's a lot of disagreement about, you know, these different approaches, and it'll be interesting to see how that conversation unfolds with the new team in place. But you know, I do think that it does matter to what extent these things translate into trade policies, translate into restrictions, and really could have significant production effects for the reasons Gregg just mentioned. I mean, you know, the idea that everything can be organic and, you know, that's going to feed the world is not a good way to approach agriculture. So it'll just be interesting to see how broadly, you know, there's always sort of this, you know, we think one way, the EU thinks another way, and we're kind of trying to persuade people to come our way. But it really will depend, I think, on how other countries react to this farm to fork initiative.
But I'm going to carry this forward a little bit because I've been to Brazil really about 2 years ago, before the big fires. Got a lot of attention in the Amazon, but the farm organizations and the people I met with down there, they really felt like, you know, the rest of the world was somewhat trying to push back on them and slowing their production, slowing, what Brazil's, agricultural growth through, arguments about climate change and doing everything to reduce greenhouse gas emissions. But at the same time, agriculture is still very much in a food security situation. How do we get to the point where we are addressing these issues like climate change in what we do in American agriculture, and then also translating that on the world trade, agricultural trade? We make the case we're sustainable. The Europeans are making the case, no, the Americans are not sustainable. We are sustainable. And the Brazilians are making the case, you really want to be sustainable, we need to increase production, and we're going to be doing it right here. It just seems like, this, constant, it's like a classroom of economists all go, no, wait, I got a better theory here. How do we move forward in agriculture and climate change when it comes to trade?
All right, I'm going to take the first stab at this, Chris. But the answer is, and this is actually something we're working on at Aimpoint, and it's a fascinating conversation, is it's the nexus of data with the nexus of how to talk about the data. And I think these two things are a lot more complicated than policymakers give credit for. We have to teach our own selves in agriculture how to talk about what we've already done in terms of sustainability. We have to have the data to back it up. We have to go to our policymakers and help them understand this is where we are, this is where we're going, this is the data, this is how we're doing it. And then to present that to the general public, you've got to talk about it in the right way using the right language. And I see everybody shaking. That's a lot more difficult as for those of us that are in this data world, that it's sometimes making that translation is not that easy. And so it's going to take a lot of work on all of our behalf to figure out how to do that.
Everything Gregg said. No, it really is. It comes down to, and I do think, though, those of us in trade and agriculture, one thing we are good at is data. So understanding that, just that first step, is extremely important. We got to be able to put those metrics in place. And then, yes, it's being able to turn it around. I think it's interesting. My career has ebbed and flowed between public affairs and policy and stuff. So it has been a lot of talking to various audiences, and as mentioned, we need to also be able to turn back around and have a little bit more of that qualitative discussion on it. And I think it's we've been really good for a long time. My own family, like, well, we've been doing conservation practices for decades. I'm like, okay, good, but you need to back that up. And then you need to flip it around and be able to say both. So it is recognizing how you have that qualitative, quantitative mix of messaging along with those metrics at each point. And then how does that translate over from what we're doing here to understanding how that's going to fall into any other policy initiatives that we're engaging in, like a trade agreement, for instance.
And just a quick add here, and with the Biden administration focus on climate change, I think this is not going anywhere, and this is going to be embraced and somehow, start putting farmers going to start doing things that's going to probably going to have some impact on the way the crop insurance is going to be going forward. It's probably going to have, so I think there's a lot of things that's going to be inevitable. But I also think that's, like, speaking of technology, it could also be some room of we don't have to ignore it altogether, right? But we can do it sustainably. You can still use technology, but then still use a lot less inputs if you're using these kind of machineries or things like that. So I think there's always going to be room there, or you alter your practices. You now start doing cover crops, and by the way, if you already done it in the past, I know you can get credit for that. So that's a new thing. But so I think there's going to be a lot of benefits here, and I think that's producers going to be doing that, and that's going to be how they're going to be able to sales and to export to other markets based on what the new policy domestically is going to drive that to.
So that's a good transition to the next question on the Biden administration. And we know that TPA can be a hindrance if it is not extended out after July. But where is the bang for the buck, so to speak, for the Biden administration in terms of making a footprint on expanding agricultural exports? Is it the UK? Something there? Finishing up with Kenya? Where do you see something moving forward that that can happen where they put their imprint on things?
That's a good question, and I'm gonna take your question a little bit different direction here. Just speaking from experience in a long time in Washington, I'm gonna tee it up for Cassandra to take it and run with it here. I want to emphasize to everybody to help them understand when it comes to a lift between the administration and Capitol Hill, whether it's getting a USMCA ratified, whether it's getting a TPP done, and what I'm talking about and gearing this up is TPA. Folks, this is a lift. This takes a lot of work, a lot of engagement by the administration in the White House on a daily basis. People come to work, what are we going to do today to get this over the finish line up on Capitol Hill? These are very difficult things to do. One of my frustrations is in this town in agriculture is, well, we just assume once the deal's done that it's going to be done by Congress. Folks, there is another really important step that comes next. That's really a lot of work. And Cassandra, take it from there and go with it, because this is the message here in the next few months.
I'm going to hit on both. It really is. So I think the last go, we had the pressure of TPP on our shoulders, right? Of wanting to get TPA passed for that sake. We need to learn from our own lessons of our past, I should say, in that department, because there is a lot to do. We have a lot of re-education that needs to take place with all the new members in Congress. I think we're forgetting that too. Is that we need to explain what this really means. And also, as I was saying before, we're in a new era with trade. We're not just talking about basic market access. We need to be able to help explain what we are getting at when we're getting into these agreements and accomplishing there. And a lot of it is in relationships too, which I don't think we always spend a lot of time in. Maybe we need to pull in some lessons that we're just talking about on the climate policy side of things. It's not just about the metrics. It's also about the story around it and how you build that out. So this is something that we need to be doing now. And it's not even because we have an agreement that's like close to being done that we need to carry over the line. This is for that whole realm of getting through any negotiation. And then as to the point of where's the bang for the buck, I think we're past that era now, looking at one market very narrow as like, just get that market, we're good. I think we've learned, we want China, we definitely do. We wouldn't spend all this time talking about it if we didn't, but it's not just about China. It's about being able to have that leadership position across markets. And when we're talking about things like geographical indicators in Europe, over the past few years, we've been losing out because they've been able to continue to spread their wings in different agreements and GIs, for instance, while we were working on some other areas. So this is about repositioning ourselves across the global market to be able to make sure that when opportunities arise, when it's not as consistent markets like we have probably with our neighbors to the north and south in particular, sometimes it's more markets that ebb and flow, like a China. We are ready and positioned, and we won't have to be worried about something that could get in the way on a non-tariff barrier basis, for instance. So that is, it's a long-winded way of saying TPA, we need to be working on that now to help support our negotiators as they're engaging in a more strategic approach across the globe in all these markets from varying angles because of the different needs we need to accomplish with all these different markets.
We really got to figure out how the Europeans do so well with geographical indicators. They're able to sell that, but I mean, look, this isn't going to be any safer than what you've got now. It's not going to taste any better. Your consumers are going to pay more for it, but we're going to be happy. So why not sign this agreement with us? And somehow they seem to get a step ahead of us on some of those geographical indicator issues with that. I'm not sure how that works, but we need to take some negotiating skills from them at some of these points, maybe. But Kanlaya, I want to put you on the spot just a little bit, representing John Deere and your experience in the parts industry. We still got a lot of tariffs going on, 301 tariffs, 232 tariffs. They affect both imports and exports. As an equipment manufacturer, where's the pressure point that you guys are seeing when it comes to these tariffs that are facing you, both selling and buying?
Yeah, and that affect not only we have the tariff on, but the recovery, the economic recovery that happened so significantly. Nobody really expected to recover the way it is. It's really put a bottleneck on our supply chain. And in fact, I think the number we put in our earnings talking about the cost that could cost us $500 million just from the rising in material costs. Part of that is because we don't have enough supply domestically, and we have to import it, and the rest of the world facing the same significant increase in demand. So I think be able to have some relief, because if you look at the economic forecast in the next couple of years, we're probably going to see the strong consumer sector. So anything that could relieve and expand our bottleneck in terms of tariff, be able to get more material in, I think that's really going to be helpful. And that goes in not only on the tariff side, but that goes into the labor market as well. The housing market is very short in labor. We can't find folks for our factories. So all of this, I think the expanding the labor supply would also be something that would really help boost our economy going forward the next few years.
Expanding the labor supply in the U.S., you mean?
Yeah, right. With the immigration policy, I think that's going to be something that help relieve the bottleneck here. In Iowa, I think we are under 2% unemployment, and our factories are having a hard time finding folks, to work in the factories right now.
Well, that's a tough nut to crack. We're not going to get too deep in immigration today. That's a whole other group of conversations with everybody. But that's an interesting point, that it's affecting you guys finding labor right now in the United States. I don't know if there are any other issues that we have not really hit upon. I think we've covered a lot in the Q&A at this point. Anybody else have anything else that is really pressing you want to touch upon before maybe we turn it over to closing remarks? Going once? Well, I think we'll go ahead and start to wrap up here then, and I will begin to turn this back over to Sherry. And I want to appreciate everybody who took the time today to join us, and I hope this engagement was helpful for everybody. I'm sure that there are tons of people in the Biden administration who were taking copious notes throughout all of this. And I will turn this over to Sherry. And once again, I want to thank everybody in our panel for taking time today to participate with us.
Great, thank you, Chris. So as we reach the end of our time together today, I would also like to join in and thank Chris, Sharon, Gregg, Kanlaya, and Cassandra for their contributions today. And thank all of you in the audience for joining us and submitting your questions. We appreciate your engagement with us and would love to hear your feedback. So please take just a moment to share your comments about today's session in the very brief survey you will see at the conclusion of this forum. We do have 2 upcoming events I'd like to invite you to attend. Of particular interest to today's audience will be Dialogues on Trade and Climate Change, a series of online events co-hosted by Farm Foundation and the Canadian Agri-Policy Institute on April 7th and 9th. This is an excellent opportunity to continue the conversation on ag trade through the lens of climate change policies and their potential impact on North American and global trade. In addition, our next forum will be March 16th. The topic will be Emerging Carbon Markets in Agriculture, Issues and Opportunities. Registration is open for both of these free events, and you can find the links to registration on the Farm Foundation website or on our social media in the coming days. We hope you'll make plans to join us for either or both of those. So thank you once again for your engagement today, and we look forward to seeing you at future events. Thank you. Be well.